resilient and equitable work for all. Ms. Certain has had a rich career at the World Bank, where among other positions she was Director of Strategy and Operations at the Independent Evaluation Group and Director for the Caribbean region. She has led various financial sector assessment programs, which is our flagship joint with the fund and the bank financial sector assessment in various countries in Europe, Central Asia and Latin America, and was the manager who led the World Bank response to banking crisis in various countries of the European Union during the global financial crisis. Prior to joining the World Bank, Ms. Certain worked for JP Morgan and Halcro Fox and Associate. And in the middle, we have Ms. Geeta Gopinath, who is the first Deputy Managing Director of the International Monetary Fund. Among a zillion and one responsibilities in that role, Ms. Gopinath leads the IMF's work on surveillance, overseas research and flagship publication like the WIO that was launched today, and she supervised the IMF's capacity development activities, that is technical assistance and training. Ms. Gopinath previously served as the Chief Economist of the Fund, and prior to that, she was the John Swanstra Professor of International Studies and Economics at Harvard University. Ms. Gopinath is an elected Fellow of the American Academy of Arts and Sciences and of the Econometric Society. Before we begin our discussions, which I'm sure will be very exciting, we'll start with a short video from Tobias Adrian, the IMF's financial counselor and the director of the Monetary and Capital Markets Department. The Monetary and Capital Markets Department is the department that leads the fund's analytical work on digital currency, as well as its capacity development activities in that area. So maybe we can go to the video now.
Esteemed delegates, colleagues, and viewers joining us online. Today, we gather for an important discussion on digital currency, architecting the future of e-money systems. The International Monetary Fund has a strong and ongoing commitment to capacity building in the realm of electronic money, or e-money. We aim to support financial authorities as they look to harness the remarkable benefits of e-money while managing associated risks. Digital payments propelled by e-money are revolutionizing financial services for billions across the globe. For many individuals, e-money is not merely a payment tool. Rather, it serves as a gateway to greater financial inclusion, opening doors to lending and insurance options previously inaccessible. However, this rapid growth brings forth challenges to financial stability, particularly in regions where these digital services are becoming as systemic as traditional banking. Through our published departmental papers and completed technical assistance, we introduce to our membership key concepts of e-money regulation, supervision, and oversight. Moreover, our outreach through regional workshops on fintech regulation and specialized e-money exemplifies our dedication to equipping our members with the necessary tools and knowledge. It's vital that we emphasize the importance of coordination in impactful capacity development. That requires considerable commitment from donor partners, the authorities, other CD providers, and even within the IMF itself. Together, we can ensure that jurisdictions not only harness the potential of e-money, but also safeguard against its risks. I look forward to our discussions today as we architect a resilient and inclusive future for e-money systems. Thank you and enjoy.
Thank you, Tobias, for this introduction. Let me turn first to the First Deputy Managing Director with a broad question. Geeta, could you explain how does the IMF help countries develop regulatory frameworks for e-money that both ensure financial stability while fostering innovation, and how does it do so in a way that fosters international harmonization?
Thank you, Dominic, and welcome to all of you to the IMF World Bank meetings. It's great to see you here. I think before I jump in to answer your question, it's helpful to be on the same page on what we mean by e-money. We're not talking about crypto, we're not talking about stable coins, but we're talking basically about electronic money that's used for payments and that we use to make payments to our friends and to family and so on. There are familiar names if you think of, for example, MTN and Orange that has, it's available in 15 African countries. In addition, you have Venmo in the US, WeChat in China. So these are all examples of e-money, and just I think it's helpful to make sure we're all on the same page in terms of what we're talking about. Now, we see tremendous, of course, benefits from this kind of e-money. Financial inclusion is a big one. M-Pesa, for example, in Kenya, has played a very big role in increasing financial inclusion. And as Tobias just mentioned, it's not just about payments. Ultimately, it becomes a gateway to lending and other kinds of financial activities. So we see many benefits from it. We're seeing a big growth in the e-money sector, especially what happened during COVID and following it. There are around 2 billion accounts around the world that involves transactions of about $1.4 trillion on an annual basis. So that's a really wide footprint, and it's growing. So this is why, while we see the benefits, we do need to make sure that you don't have the risks that come along with widespread use of e-money. And here, the IMF plays a very important role. We are trying to ensure that there is innovation in the sector, but at the same time, that you also keep financial stability. Specifically, what have we done? Over the last 12 months, we have had 9 regional trading workshops that deal with issues on fintech regulation and supervision, also helping, this is about e-money issuers, how do you regulate them, how do you supervise them, but also looking into things like their data infrastructure, whether it's secure from cyber attacks, also looking at what can happen if things go wrong and if there's a fraud or there is some sort of a disruption, how do you protect the people who are putting their money in this. So these are the kinds of workshops that we deal with in multiple countries. We are also looking at issues of cross-border payments. We're working with the G20 on this, which is to increase cross-border payment interlinkages. That's going to require that the systems are more interoperable than they are right now. So we're working closely on that front. And again, this is an area that we see as having value for society, but we want to make sure that it is done in a way that keeps the financial system stable.
Thanks, Gita, for laying the lay of the land. And now we know what we are talking about, and so I can talk to Governor Hilaire. So, Governor, in a sense, right, around the world, we have many regulatory authorities that are building expertise on digital financial services, while at the same time overseeing these services. In a sense, maybe it's a bit the proverbial, flying the plane as one builds it at the same time. And obviously, logically, that maybe in a longer licensing period, as staff gets comfortable with this new business model. Can you maybe tell us a little bit what was the journey for yourself in Trinidad and Tobago? How maybe the technical assistance you received from the fund was helpful in that journey? And maybe what advice would you have for others that are tackling similar challenges?
Yes, thank you very much. Our journey in Trinidad and Tobago started about 5-6 years ago. We were in a situation where cash and checks dominated financial transactions, and we said we needed to move things more into the modern world. So what we've also found was that the pandemic, because of the restrictions on movement, actually led to an increase in digital transactions. So we had a start there. Now, what did we do? At the central bank in particular and the ministries, we started to scour the vast literature, and there is a vast literature on e-money, on fintech, and so forth. We also engaged the fund and other institutions in technical assistance and trying to understand the world, understand country experiences. The fund engagement was, I thought, excellent, not because I used to work here, but it was really excellent. We had some pragmatic advice and the whole system. Some of the recommendations included that we should have an entity-based approach to e-money, that we should streamline our systems of regulating it, and that we should reduce some of the important. We also increase the wallet sizes and so forth over time. With respect to the staffing, we thought that was an issue that we needed to deal with because the staff in e-money, so we had to get a certain type of staff. We started a new department and so forth. Public education was also important. Results. We found that over the period since the e-money issue ordered, we had 5 new companies that were issued registration as e-money issuers, including our 2 big telecoms. Well, one of the telecoms dropped out for its own reasons. We found overall that the results were encouraging but measured. There were certain e-money being issued, but really in niche markets, remittances and certain government payments, but not a huge set of things going on. And we found at the same time the world was changing, that there were many companies that were actually upping their game, the credit card companies, debit card companies. There was also one e-money issuer from a commercial bank, because we didn't need to have a special license for that. They actually started to reduce their charges and to create a better space. So that was, we thought, important. What are the lessons? Let me give 5 lessons that we think are important. The first is that there are many lessons to be learned from those who have learned many lessons. Yes, that's what I said. It means that the world is such that you have a lot of countries that are at different stages, and we could actually learn a lot from them. We thought that was quite important because you do not have to reinvent the wheel, and you could just utilize all the different country experiences. The second lesson is that build it does not necessarily mean that they will come, in the sense that you could have the most perfect e-money system or digital system that you want in your heart, in your mind, in your soul or whatever, but people may not be interested in it. It has to have value added. They must see the importance of it, and so it is important to get feedback on country experiences, but also feedback from the individuals as how do they see it. The third lesson is that supervising fintechs or e-money is very different from traditional financial supervision. And so we had to learn that, because the fintechs, the e-money issuers, could be very different. They are a motley crew. They are small, they could be large, they have different ways of doing things, so you have to be adapting to that. The fourth issue, and this is ready for central banks, is that the central banks end up having a huge pivotal role in educating the public and also straddling the worlds of being operator sometimes, of being regulator, and of being just in charge of the whole thing. The fifth and final point is that a lot of these issues are large issues that must be embraced by the country as a whole, by the elected representatives, so that the central bank may have a role. It may want to do certain things in a technical way, but you need to embrace the legislators, the regulators, etc. For one example, let's say El Salvador embracing the Bitcoin, whereas you have skepticism in other countries. So you have to be aware of that. So let me stop here, and but I'd certainly be happy to share with you our own experiences with our fast payments project, including the 5 lessons, how they helped us, and the 4 ways in which the fund and other agencies can help us in moving along in this journey. Thank you.
Thanks a lot, Governor. And you highlighted, in a sense, the interesting complexity of the ecosystems, right? The fact that when you touch on e-money, it has an impact on traditional money, in a sense, or traditional banking, and also you're facing a whole lot of different players, and then the role that the central bank and other public actors may play. And I'm sure we'll come back to that for the discussions with others. If I turn to you, President Gonzalez-Richie, at the central bank, you went through the process of finalizing a comprehensive draft law on e-money, and in that context, you had the technical assistance support from our Technical Assistance Center for Central America, Panama, and the Dominican Republic. What were the key challenges that you faced in developing this legal framework for e-money, and I'm assuming balancing, promotion of enabling innovation, financial inclusion, but also wanting to keep financial stability? And how did the technical assistance from the fund and maybe from others help you tackle these challenges?
Yes, thank you, Dominic. I think that the history of Guatemala is mainly the same story of all the countries. After COVID, for example, we have a huge increase in e-money transactions. Guatemala, I think, is the only country in the world that has 19 million people living in it and 20 million phones. It's incredible. We have more phones, mobile phones, than people. So everybody has a phone. So we need to find the solution and start regulating the e-money transactions, mainly to protect the user, because the e-money transactions were, canalized just by private companies without any regulation. So we need, to find out whether regulate the fintech companies or just regulate the e-money transactions. So we take the decision of just regulating the e-money transactions. So we start meeting with the banks, the fintech companies, superintendency of banks, central bank, in terms of trying to build up a draft that, the main problem was that we need to put the banks competing with the same regulation as private companies. So we have a lot of, challenges there, but we get to a middle point. And after we get to that part of the bill that was needed to be presented to the Congress, we asked the CAPTAC DR people, to start helping us, and they have made an excellent job. They went to provide a lot of support to Guatemala. They help us to find a consensus in the bill that is already one step of getting to the Congress. So I think that the main solutions were provided by the CAPTAC DR people in terms of how to provide this safeguard for the money, for the aggregate money that was generated in this e-money transactions. In the case of Guatemala, the solution was that all of the money was safeguarded in the central bank. We have, an option to build a trust as in other countries, but we decided to have the safeguard the money in the central bank. Also, another important thing that we do in Guatemala is that the e-money bill that is going to be presented to the Congress is just for payments. In some countries, I think Colombia, if I'm not wrong, they provide loans, they accept deposits. In the case of Guatemala, it's only as a payment method. So I think that the challenge, the biggest challenge was to sit in the same table, the bank, superintendency, the private companies, to find this equilibrium in which everybody can, exponentialize the business. Because what happened also is that the information requirements to open an e-money account are much, simple than opening an account in a bank. And also, I think that the most important strategy that we are building right now in Guatemala is the financial inclusion strategy. So, the e-money strategy is hand by hand by the financial inclusion strategy that it will help Guatemala. For example, Guatemala, we have a 37% of financial inclusion index. So we need to put more people, using and going to the financial sector. So this e-money bill that needs to go approved in the Congress certainly will help, to increase this index. So, a country like Guatemala, can really grow more than the 3%, 3.5% that we are growing right now. And we are sure that with the financial inclusion strategy and the e-money, strategy will, provide the solution that we are looking for.
Thank you, President. Thank you for highlighting this element of, in a sense, of safety, in a sense, safety for the ultimate users in a way that then brings them in and allows them to use financial services. This is something I'm sure it's very close to the heart of your neighbor to the left, Ms. Certain. Your group, the CGAP, has worked a lot on these issues of regulation.
And in answering, I'm going to take a broader policy perspective, because indeed e-money and its regulation and supervision can have a very significant impact beyond affecting financial sector policies and stability. It has offered to millions of customers across the world access to to payment transfers and saving services, which in turn, as was mentioned before, can really generate very fundamental progress in entrepreneurship and MSME growth, in women economic empowerment and agency, in resiliency, in even the effectiveness and efficiency of cash transfer payments. And as was mentioned, it's a non-ramp to more financial services and greater opportunities, because you can leverage the digital data trail that are generated by the use of e-money to obtain additional products. And so it's very important for policymakers and regulators to think about designing policies and regulations and supervisory approaches that adequately balance, on the one hand, the need to strengthen consumer protection and maintain stability, to build trust, and that's very important for the uptake of e-money. But on the other hand, to have a regulatory framework that enables competition between different types of banks and non-banks actors, that fosters inclusion, and that enables data-driven innovation, because that's really the beauty of e-money going forward. And so in thinking about that, I think there's different levels of policy and regulations that are needed. At a very high level, investing in a digital public infrastructure that is inclusive is fundamental. And that seems very basic maybe for many of you, but in reality, we still have 850 million people in the world that do not have IDs, and IDs are necessary for KYC and for authentication, even for e-money. Secondly, we still have a very significant gap in connectivity and access to affordable phone and data and internet services. In fact, 1.5 billion people in the world don't have access to finance, of which about 32% don't have access to a phone, and e-money often is offered through mobile money operators, and 67% don't have access to internet, so they can leverage e-money for digital payments. And of course, we need interoperable, fast payment system to enable these transactions. But at CGAP, we talk about digital public ecosystem and not infrastructure, because regulations and policies matter beyond infrastructure. And here I want to highlight 4 key regulatory enablers of prudent e-money. The first one is, I think was mentioned before, but it's really to have a regulatory framework, so an e-money regulation or law, that adequately provides this balance. So on the one hand, you want a legal framework that enables, that has a licensing regime with proportionality and enables different types of agents with different types of activities to participate and benefits from proportionality, for instance in eKYC. But on the other hand, you do want the regulation to provide for the right consumer protection and safeguards, including, and you all know this, but the adequate ring fencing of funds, liquidity requirements, supervision of the entity, whether ring fencing in case of bankruptcy, possibly deposit insurance, all sorts of measures that will really provide this trust and consumer protection. That's one key enabler. But we need to go beyond that. So the second key enabler that is really fundamental to unleash the potential of e-money is agent network regulation. And we can't underemphasize this at all because it's really important. Even if e-money is picked up in your country, you still have a lot of cash economy dominating in rural areas and with low-income populations. So having agent networks, and therefore having a regulation to enable them to cash in, cash out at the last mile, and to provide, in fact, consumer literacy services, because that's a key role they play. You again need a regulation with a lot of proportionality, a regulation that enables agent services all the way to the village, but at the same time that provides sufficient safety nets in terms of the due diligence and the accountability for risk at the level of the institution that uses the agent. The third key enabler is consumer protection in its own right. And many of you mentioned it, but risk coming from digital financial services, including e-money, are increasing tremendously in the world, whether it is fraud, scams, data thefts, identity thefts, or cybersecurity, or just consumers' illiteracy leading them to making mistakes. And so we really recommend that in parallel to developing your e-money regulation, you really strengthen your consumer protection regime. And there's 4 key things to highlight. First, you need minimum rules for all players, including e-money providers. You need more collaboration with other agencies, such as the telcos, if MMOs are providing e-money, or the data privacy agency or the consumer protection agency. You need to be much more consumer-centric and go beyond compliance. And you need to capacitate these agencies that are often the least, or even the departments in supervisory agencies that are in charge of market conduct are often the least equipped, and they need sub-tech and market monitoring tools. Last enabler that I'd like to highlight is data sharing systems, including open finance, because the beauty of e-money is in the digital data trail that it generates, which has the potential to become the new collateral of many people that don't have real estate or other collateral. It can be used in credit assessment to provide loans, but also in developing a huge number of different apps. And that's why open finance regimes are so important, but they're also very difficult. They create risk. And so we're working with the IMF, the World Bank, and the BIS on open finance principles to guide countries in implementing these as part of this architecture that is needed.
Thank you very much. So in a sense, we have heard about infrastructures, about regulation and supervision, about consumer protection. We've talked a little bit less about the digital trail. Maybe that will come up. Just to prepare everybody, we have 2 microphones in the room. We'll have time for a couple of questions to give you time to think about if you have any question. Let me ask one more question of Gita for a second. Just maybe a question that's a teeny bit more specific to e-money provider institutions that have become systemic. And in a sense, maybe when you mentioned some examples, you may have had some of them in the list that you have. What consideration do you think regulators and policymakers should take into account to ensure the stability and integrity, in particular, of these systemic institutions?
Yeah, no, this is a great point. By the way, I think my co-panelists have pretty much answered this question and more in terms of what needs to be done in terms of supervision regulation. But to your specific point on e-money issuers that are large, that makes them systemically important, Our advice is always that when you're talking about regulation, it has to be, and supervision, it should be risk-based supervision. So the bigger you get, the more systemically important the company becomes, the more closer attention has to be provided in terms of supervision of their activities. And this is going to be critical because, of course, if something goes wrong, it's going to be at a large cost to a large portion of society. So there are, besides the supervision, there's the requirement of how much of capital they should have if they, in the event that things go wrong. What kind of contingency planning do you have if there is a cyber attack, if there is a disruption? How do you make sure that you're agile and you're quick and you're able to respond to it? So all of this is going to be very important. And the larger you are, the more important this is. And we know there have been cases of serious problems. I mean, Wirecard is an example where you had serious fraud associated with it, and it was very damaging. So again, we all recognize that this e-money is very helpful as in terms of what it can do for society. But again, making sure that it remains safe, that you're protecting consumers, customers, that you're making sure that its interconnection with the rest of the financial system is stable. Financial literacy is absolutely critical, which was brought up again over here. All of this matters to have a good, sound ecosystem.
Thank you. I don't know if we have any questions from the audience. Yeah, if you just could walk to the microphone. And if you could introduce yourself.
Hi, thank you for the very interesting conversation. My name is Yoni Arbel. I'm an independent lending consultant and XY's head of treasury. My question is about safeguarding customer funds within central banks. And what are the panel's opinions on that?
Okay, thank you. I don't know if there's any other questions. Yes, please, if you could just walk to the microphone.
One quick question. I'm Sebastian from ICD, Sebastian Corral from ICD. Just a quick question on the on how digital currencies have been a factor to reduce tax evasion, or the other way around. In a sense, just to think about it as a sometimes it can be thought, you can think about digital currency as a replacement of cash transfers, where there's usually it enables tax evasion. What has been the case with digital currencies in that front?
Thank you. Please.
Samir Trabelsi, Professor of Accounting and Governance at Brock University. My question is, how can we avoid AI washing in these e-money systems so this digital currency revolution produce its social impact? Thank you.
Sorry? No. Understand. Okay. Maybe I'll turn to maybe there was maybe question maybe for the governors if they want to take it about safeguarding the money at the central bank. What are your thoughts on that? I'm not sure who will take the question on tax evasions, if you want, but maybe Governor, if you have...
Well, safeguarding money at the central bank, I think the issue really is what is the role of the central bank, or how would consumers' funds be protected? Because, and I think this is one major issue that may be against financial inclusion, in the sense that people are concerned that they have cash, they can see it, they can feel it, but you have electronic money, it's just somewhere in space. Where is it, and how am I assured that it is there? So I think the role of the central bank is important to not necessarily be the custodian of the funds. You might have more that in a digital currency space, central bank digital currency, or a big fast payment system such as we are going to introduce in Trinidad and Tobago. But the reassurance that the supervision is such that you could be not 100% sure, but your funds are safeguarded because of the capital requirements, because of the risk-based approach to supervision, etc. So I think that is what we have to be aware of.
President Gonzalez-Ruiz, in your intervention, you mentioned that you had taken a decision to basically host the money at the central bank, if I understood you correctly. Could you explain a bit more the thinking behind that?
Yes, as I understand the question, the safeguard of the money is not a trust, established in a bank. Is the money is going through the central bank, so the aggregate money will be 100% safeguarded by the central bank. And the idea here in Guatemala is that the central bank has a lot of credibility. So using this mechanism of safeguarding the money in the central bank, we are like endorsing the credibility to the fintech companies. So that's one part of the question. And just I think the other part is tax evasion. Just to be really quick, I think in Guatemala, low tax burden, and the first step of getting banking services or financial inclusion, it will be this e-money project of law that it will be presented in the Congress in a few weeks from now.
Right. So then maybe since you mentioned information in a sense trail, right? In a sense, tax evasion is related to that. Information trail can have benefits and can have maybe drawback, as seen from some users. How do you feel about this question?
So we do see indeed in several countries, especially small entrepreneurs, being worried of becoming transparent, as you were saying, and of using e-money. And there are countries where e-money is really not being picked up for that reason. So we are discussing whether you need some years during which you give a sort of tax, not forgiveness, but a period where you forget about what you see, which may be useful, because in the long term we see that entrepreneurs actually see the values of e-money exceeding the potential cost of being transparent, because that enables them operational efficiency gains, access to additional financings through credit, access to digital marketplaces, and therefore growth of their business. But before that materializes,
the money that people are putting in these wallets, and whether you do that through central bank accounts, whether the central bank backing would be the safest way of doing it, but sometimes the central bank also has to make sure that it's not taking on some risk that it shouldn't be doing. So I think there is an important decision to be made, and there are variations in which countries.
To our member, want a little bit more to the capital, and he can also want a little bit more to the capital, and he can also read there more about the partners that support us. I also hope that we will see you at our upcoming event and the Global Public Finance Partnerships, which is our new vehicle to support capacity development in fiscal issues. I do hope that you have found this event insightful. Please join me in a round of applause for our speakers. Thank you very much, and we wish all of you fantastic continued e-journey on the e-money path. Thank you very much.